operating working capital. And just to highlight once again, operating working capital or the working capital management is critical, is extremely critical for any business. And why it is extremely critical for any business? Because the long term sustainability, the long term life of any business depends on how good or bad is the working capital management of any business. And how do we understand more precisely the working capital management of any business? We understand from the perspective of operating working capital. Which are the components of operating working capital? On one hand, it has got the inventories and the receivables. On the other hand, it has got the payables to the suppliers. So the difference between the inventories and receivables and the payables, that is my operating working capital. And somebody very rightly mentioned a little while ago, the fundamental principle of working capital management or achieving efficient management of working capital, the fundamental principle is shorter your production cycle, shorter your operating cycle, better is going to be your working capital management. Because shorter the operating cycle, shorter the production cycle, that means so much less of inventory is going to be locked up, so much of less receivables are going to be locked up, so much of the funds of the company are so much less funds of the company are going to be locked up. And that means lesser the operating cycle, lesser the production cycle of a business, lesser is the inventory locked up, lesser are the cost of inventory carrying, lesser the receivables, lesser is the cost on receivables management. And so lesser is the cost of bad debt, lesser is the cost of interest, lesser is the cost on receivables administration and things like that. And so which means what? Which means basically all of us need mentally to be aware that all of us need to focus on one single thing as far as the working capital management is concerned, and that is how to minimize our operating cycle, how to minimize our production cycle. And then of course, as we discussed those levers the other day, we also keep also need to continuously working on bringing the inventory down, bringing the receivables down, bringing the cash and bank balance down, and and try to have better credit terms from our suppliers, and also talk to the banks to reduce the rate of interest, and finally to work to reduce the production cycle of the business or the operating cycle of the business. So friends, this is what we discussed in last 2 days. Today what the plan we have is, number one, we look at the financial analysis.